Hello and welcome everyone to Gold Asset of the Day for the 17th of September, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, let's just do a quick recap of what happened last week. And many of you have been in touch last week due to the levels that we had suggested, where we were looking at buy zones last week and where we were looking to essentially take some profit off the table. We actually saw those ranges hit spot on, where we got a revisit last week back towards that 1,485 US dollar per ounce zone. But as we mentioned, we were not looking for this steeper correction to the downside. Many retail traders were getting on the sell short side. They were getting in on a breakdown of a trend channel, looking for a lot more downside, down to 1460, 1450. However, we were expecting very shallow retracements on gold last week, looking at opportunities below 1500 to build positions and then take advantage of a breakout back towards that 1525 level. That's exactly the way it played out last week, and well done to everybody who capitalized on that. Many of you has messaged in, commented on the YouTube video and so forth, that you did manage to catch that gain to the upside and you got on the right side of the position rather than the wrong side that many retail traders were. Last week we saw hedge funds and money managers increase their net long positions again in the latest week, and we were building positions in the anticipation for also the European Central Bank announcement on Thursday. We actually had the breakout to the upside after the European Central Bank statement, and we took advantage of that breakout, banking the majority of profits before we actually then had the press conference with Mario Draghi, and we saw that correction later on in the week, allowing us in fact to buy back into gold lower on Friday, and then yet again capitalizing on a large breakout on the Sunday open as a result of Saudi Arabia, one of the biggest oil refineries, being attacked. And we saw that big spike up on the open, not only for oil, but gold prices as well, which enabled us to take advantage of banking profits right off the open. So now what do you need to know as we enter a fresh week here? What levels are we looking at? What are we anticipating in terms of major news items? Wednesday, we have the FOMC statement. So that needs to be very firmly in your trading schedule this week. That's going to be Wednesday, the 18th of September. 7 o'clock London time is the actual statement. And then 30 minutes after that, we have the press conference from Jerome Powell. The Federal Reserve are expected to cut interest rates on that statement. However, everyone is going to be watching for the rhetoric with respect to future policy guidance. And that's what we want to look out for very closely, and also the response from Donald Trump as well. Last week, Donald Trump had been very vocal in expressing his wish for the Federal Reserve to cut interest rates down to 0%. And with that, he also referred to Jerome Powell and the Federal Reserve as boneheads on Twitter, which you may have seen. And with that, we did see gold catch a bid off the back of that last week, and we saw a little bit of weakness on the dollar. What you really want to watch out for is also, as well as the FOMC statement on Wednesday, its response then from Donald Trump too, which can have also a significant impact on gold prices later on in the week. So we won't only have the FOMC statement itself, we'll then have several other Fed officials speaking later in the week, and of course we'll get response from Donald Trump, depending on how hawkish or dovish the Federal Reserve is. There's actually going to be 3 more FOMC statements after this one between now and the end of the year, so we really want to look out for the projections with respect to the potential for the Fed to cut more interest rates between now and the end of the year. Now, this can be a very large catalyst for gold. As you can see at the moment, gold is holding around 1,500 US dollars per ounce. So far this week, we have had shallow retracements. The low from the last week or so has been at $1,484, and the high has been $1,524 to $25 per ounce in the latest week. We may continue to consolidate here. Some traders, they're squaring up ahead of the FOMC statement, whereas others are building some positions at these levels to have a hedge against the geopolitical risk that we're seeing at the moment. So we saw at the weekend that Donald Trump had tweeted that the US is locked and loaded to respond to this attack on Saudi Arabia. However, then Donald Trump tweeted later on Monday that he's not looking to escalate into a war. But we're still very much waiting for more rhetorics on this, and we want to see how things develop over the course of this week. And therefore, gold is not pulling back much. It is getting that safe haven bid as a bit of a hedge against any escalation in geopolitical tensions. With oil, it was the biggest one-day move and spike higher since 1991, since the start of the Gulf War. So we had a huge move on oil on the open, which I'll cover in more detail on Oil Asset of the Day. So for this week on gold, we are expecting some range-bound trade in the lead up to the FOMC statement. We are looking again at buy opportunities in the lower end of the range. I would be looking between 1475 up to that 1485 level. If we were to drop as low as that, I don't know that we will because of the support we're seeing from geopolitical tension, but if we were to roll over down towards those levels, I'd certainly look for buy evidence again at those zones, then with a view to take the price back towards that 1510, 1515 and 1520 zone. This week, normally from a seasonal point of view and a cycle point of view, it is not the week where you get the breakout and you could potentially retest again the swing highs. I'm looking out for the potential to do that between now and the end of the month, especially next week, once we get past the FOMC statement and the narratives with respect to the geopolitical tensions that we're seeing at the moment. We want to see whether we get a resolution on that, but from a cycle point of view, I'm looking out for further upside between now and the end of the month, but it could be next week that we do actually get that cycle higher. This week, we're looking at a bit of range-bound trade. Traders are very much just taking a pause right now and waiting to see what the FOMC statement delivers, what the rhetoric is going to be from Jerome Powell, the response to the recent Saudi Arabia attack on one of the largest oil refineries, and also we want to watch out for further responses later on from Donald Trump and other FOMC members and Fed officials with regard to their monetary policy guidance too later this week. So in summary, what we are looking out for is really to see whether we're going to continue to get buying evidence below 1500. If we don't break much below that, we're looking at levels of 1475 to 1485 for strong support to come into gold if we do break down as low as that. Now, let's say, for example, the FOMC statement is very hawkish and we do get a sudden breakout on the dollar and gold does dip lower. At those levels, I would be very interested to look for buying evidence to the lower end of the range. But at the same time, if we do see a dovish Fed and gold does break out, immediately off the back of that, we could easily then break above 1510, 1515 and start making our way back towards last week's swing highs of 1525, which then sets up for a bull flag on the daily chart and the prospect of higher prices as we go into next week. So with that, that's been Gold Asset of the Day, and I wish you good trading.